Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Well, good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Thursday, the 14th of December, 2017, about 3:20 p.m. Central Standard Time. Yay, I'm on time today. And what you're looking at right here, these will be the settlement prices in these stock indices. They will reopen at 3:30 p.m., trade till 4, but the settlement's determined at 3:15 p.m. Central Standard Time. As you can see, the metals, by the way, are slipping back. You closed in gold at $1257.10, so you're down about $2.20 from there. Silver actually finished the day at $15.95, so a little pullback. But it's the stock market that's interesting. It did not help that Mario Rubio, the senator from down in Florida, is saying no. Without further increase in the child tax credit, he will vote no as a Republican against the tax bill. You know, you can't afford many losses here, so you've put jitters back into the market over that, and that's what I think in large part is pushing that. Another bounce in the crude, but you saw today some interesting articles out of the IEA, and what they're saying is that the U.S. production is going to pick up enough in the first 6 months of the year to make up what OPEC has pulled off the market, and they don't think that the market is going to advance sharply in terms of supply-demand. In other words, there'll be more supply coming on, but they see it the second part of the year, if world economies continue to grow, that it'll come back into balance. Something you got to think about there. When we take a look at the S&P 500 index on an area chart of just closes, you haven't been under this 18-week moving average of closes, literally, the whole year of 2017. That is unbelievable. I don't know what else to say. It's just been an unbelievable rally. When we go to the daily area chart of closes, you did break back in November to it, and if you go further back, you did. That's more normal. The pattern is still one, though, where we've had a pattern of higher closes, of highs, higher lows. You can see that on the chart visually. Interesting. When we go to a daily bar chart, you came up for a new all-time high and all the other numbers yesterday. You're backing off a little bit today. You're still very much in an uptrend. Now, something bothers me. I left this arrow here. Yesterday, and I want to take this off, you had what's called an outside day up. You took out the previous day's low and high, and you closed higher on the day. If you take out the low of an outside day up, as you did right here, often prices retreat back to the closest of the main moving averages, be it the 18 or the 100. I left this here just so you can see. This arrow actually has to go all the way back here. You'd have higher lows, higher highs, but with that outside day down, one of the pieces that it calls for is you've got momentum in place maybe to get back to 26.3275. That's from here. It's in the neighborhood of 19 points. We'll see if that happens, but it's a technical warning. It is not a go sell signal the way I teach in my charting course. Why? I want you to look at the chart. It's one thing on the way that I teach to get out of a long position. It is a very different thing to go short when you're over the 18-day average. One of the filters on keeping away from short side is when you're over that number, you should have an upside bias. You were not able to get to the upper Bollinger Band, and momentum is still embedded. What's the most important thing in the hierarchy of technical tools? It is not taking out the low of an outside day up. It's if you lose the embedded reading where the red line gets under 80. Now, two numbers make up a slow stochastic momentum, and think of the two lines crisscrossing each other. Often markets get overbought, retreat, oversold, bounce a little bit. But there are times when the market, instead of that, what you get is a market that gets both numbers over 80 for several days in a row, and that's often, not always, but often, accompanied by rising prices. See that? So you have different parts to it. I consider that the most important. Now, it failed me the other day when the market lost its embedded reading right here. And instead of going back to the 18-day average, it made a run at it for 2 days, but that was it, and then it went on to new highs. That's very rare. So I'm getting certain signals that are warning. What else are you seeing on this chart? I've moved to the March S&P. So you're no longer in the Decembers. Do you have that? Okay, very important. All of the stock indices have now moved to the March for the big open interest volume because I think tomorrow's the last trading day of the Decembers. In the NASDAQ, you still have the pattern of higher lows, higher highs. You're overbought, still in an uptrend with upside bias. I'm going to guess that versus the 63.83, if that's taken out, you might get to the point where the market then comes back to or under that 18-day average. But until it's taken out, it's not taken out. The trend is up, the bias is up, but you are overbought. In the Dow Jones, higher lows, higher highs, all-time high today, and the market had a reversal. Not an outside day, just closed lower on the day. You still have the embedded reading on this chart. Everything's bullish until, in my opinion, you lose that red line where it gets under 80. In the Russell, this is a problem for the market. Here is a market that had an outside day up yesterday. Again, I'm looking at this market and saying it should not take out yesterday's low, Wednesday's low. If it does, the closest number under it's the lower Bollinger Band, and that's what I think you're headed to. It's all a game of probabilities. Do these things always work? Nothing always works. If it did, I wouldn't be here. But things work more times than they don't. And what's important is not to take my word for it. Go back on your charts. Do your own analysis. Take my charting course. You'll learn what you're looking for. I don't show you in these videos everything in that charting course. That's my design. I certainly want you to get it. And remember, on the charting course, if you use the word XMAS, when you go under my website, under education, just type that in. Instead of $109.95, the course is $79.95. I know it's the holiday. You may not want to begin the charting software and my research until after that, and that's fine. Just let us know. We will postpone everything, and we'll begin everything for you at that point. Got it? All right, so in looking at this, that's got some downside now to it, and the trend turned down. You got lower highs, lower lows, momentum down, but any reading under 30 is oversold. So these markets are now getting funny rotations. You're getting all-time highs, and yet others don't go with it, like the Russell. It's finding it easier to break down. In the VIX, the market got stuck at what I call the line in the sand, the 18-day average of closes and the 100-day. So it's rallied into a resistance area. It didn't quite get up to the 100. It certainly did the 18, sort of stalled. It's a market that is oversold, out of a trend. You've got a lower low and a higher high, and it's fighting in a resistance area. In the TLT ETF, which is the interest rate one, you came down 3 days ago, hit the 100-day average, rallied back up on yesterday when we heard that the Fed, of all things, raised interest rates, and today you got a further rally. So something's going on strange there because the bonds also rallied back up to the 18-day average. In other words, the market is acting like interest rates are having an issue moving higher. Now, you were up 30 seconds here. If you come over and you look at the 10-year notes, the rates went back up. This is lower. So the curve yield's continuing to go like this. The short-term end is coming up because the Fed is raising rates there. But the longer-term, 30-year, no, it's not going with it at all. The dollar index did not get a bump from today. Central bankers around the world, and I'm talking the European Central Bank, the Bank of England, the Swiss National Bank, there were banks in the Netherlands, they did not raise, those central banks, their interest rate policy. They stayed flat. We went up, and yet this is all you can put on the market. I think what could be happening, and you got to read about it, is maybe we're getting so late into our bull cycle here that people think there's a better edge in Europe and parts of the world than in America right now. Just put that in something to think about. It's where you're at in business cycles. Now, if we take a look here, lower low, higher high, rallied right back into the 100-day average and the 18 two resistance points. So when looking at these markets and you're coming from lower numbers, you're always looking to see where resistance might show up. Aussie dollar got up to the upper Bollinger Band today, seems to have been able to stay there, but running out of steam because you're overbought. So I'd be a bit cautious, and you're not trending. You've gone from a high to the lower Bollinger Band, back up in 3-4 days to the upper Bollinger Band. Has a lot to do with their central bank announcements, end of the year, what's going on there. In the end, back up to what number? Remember I told you that line in the sand, the neutral number on this chart's the 18-day average. I've left this numbers just so you can see how you climb out of an oversold condition there. And let's see if I've got anything else left. I should have a few things. January Bitcoin. So let's go into this right now. This is just a 15-minute chart. I can't show a daily chart. We're only into the 4th day of trading in futures contracts. But the concepts are the same. Lower highs, lower lows into the lower Bollinger Band. This is where the market should run into what? Some support levels. Momentum is down. Trend is down, and the bias is down. So you might see some profit taking, but you are not seeing buying on that chart. If we come to the Brent versus WTI crude, the 40s pipeline is still down. Now, I thought yesterday I had read that the problem was under the ocean. Now I'm seeing that you're seeing on land that they're ripping out parts of the pipeline. I don't know where the issue is with it, but they said weeks it's going to be down. It accounts for 40% of the oil that the UK relies on. The UK is now bringing in oil from Russia, of all places, to them, be it liquid gas or the oil, but they're bringing in energy. Interesting, very interesting. I thought there was a ban on that. In the Brent, you've gone from the low Bollinger Band to the high, back down into the 18-day average, fighting a battle with no trend. You're just going sideways in this pattern. This is very important. From this develops trends. Sideways action either becomes a base or a top. Keep your eye on it. It'll tell us what it is. You're doing the same in the WTI, as you can see. Gasoline is in a downtrend. Lower highs, lower lows, hits the lower Bollinger Band, gets a push off of that as traders pay attention to Bollinger Bands, and you get some covering. The nat gas is just running to the downside. Doesn't matter the weather. You have an embedded reading. Chart action is better than weather forecasters with the cold weather. There must be some warm weather coming in behind this because this market acts absolutely terrible. You put it all together, you get game plans, and if you like what I do with these technical indicators, the best way to learn, because I don't show you everything, you're not seeing window envelopes, some of the other things that I teach in chart formations, that you get in my charting course off our website with that keyword, XMAS, no apostrophe. That'll be your discount for taking the course down to $79.95, including the charting software, my research. I mean, I think you'll like what you see. But let's assume you just want to read about technical indicators. We have two guides for you, volumes 1 and 2, put together by Modern Trader magazine, and these are not new. I worked with the editor to get these put together, and these have to be 30 years old. I am telling you, they are written as though they're today. And the reason I went to them, with all the great work done today, these are still phenomenal. Each one's about 23 pages. We created 2 PDFs for you. How do you get it? Call us, 866-973-2077. Go to our website, www.iraepstein.com, or click right where I'm pointing if you're watching me on YouTube. Or underneath us, it says, click here for Ira's free information. Do so, and away you'll go. I'm Ira Epstein. You have a great day. I'll see you all tomorrow.